down the hammer and pick up the pencil. You're about to listen to the Savvy Radio Show. Learn from real-life real estate investors, experience revealed with the Savvy Landlord as your host.
All right, Savvy investors, man, I'm excited. First of all, this interview that I'm about to do has been several years in the making. I would say probably 4 to 5 years. This connoisseur wizard of IRAs, his name is Mike Todd. He's from IRA Innovations. I've met Mike at least 4 times at every Mr. Landlord convention, conference, wherever there's money being talked about, Mike tends to be there. And the great thing about Mike is that he has been consistent, and one of my closest friends out of Springfield, Missouri, drilled Mike for hours one day, and Mike, you answered all those questions to the T. And when Ed came, we were sharing a room together at the conference, and he said that you were the only guy that answered all the questions. And if you don't know Ed O'Toole, he is anal. Like, beyond recognition, like he was like throwing creative ways to use the IRA, and you were answering them, and you knew about them, and you've had experience with them. So I'm super excited for you to be here. For savvy investors out there that are on the fence about an IRA, they didn't know that they can direct it self-directed IRA. They didn't know that they could leverage it, even in a wholesale deal, and be tax deferred. So before we get into all that jazz, how in the world are you working as a custodial business development manager in Tennessee? How did you get there?
That's a great question, Steve. And some days I ask myself, how did I get here? But hey, first, thanks for the introduction, and thanks for having me on the call. I really do appreciate it. And you're right, man. We've been active with Mr. Landlord for I don't know how many years now, but it's a great group of people, and you're correct in that I really pride myself on trying to answer people's questions. So when Ed just really put me through the ringer there at that convention, man, he kept me on my toes, no doubt about it. So the story on my background on how I wound up in Nashville working for IRA Innovations, it goes back about almost 10 years now. I actually was in a totally different industry, originally from right outside of Huntsville, Alabama. And for you guys that know Alabama, it's at the extreme north end of the state, almost at the Tennessee state line, and had been working, grew up in that area and working there in a totally different industry, in a technical industry. Actually, I have a degree in electrical engineering from many, many years ago, and never really liked working that, so kind of migrated over more to sales and finance. But I've always had a passion for finance. Even right out of college, I started investing in the stock market early and had a lot of successes. Even taught people how to invest, and even wrote, so long before the internet, me and some friends of mine had started a newsletter on picking individual stocks and bonds and mutual funds, and you could subscribe to our newsletter, and we would, have money back guarantee type of thing. So I've always had a passion for the finance investing side of things, but it just wasn't my career back then. But at any rate, so I was with a firm there in Huntsville, got moved to Florida, believe it or not, in early 2000s, and wound up my office, set up shop right next to a self-directed IRA custodian. And so I was, got to know the folks in that firm and understood what they did, and I was blown away that I had never heard of it. I'm like, I can't believe I'm not familiar with this concept, because I felt like I was a pretty smart guy and pretty well-read. And I said, this is just something new to me. So at any rate, I wound up becoming a client of theirs and became successful and thought this was the greatest thing since sliced bread, and said, I've got to be a part of this industry, was how passionate I was about it. So a couple of years later, dude, I went through a bunch of, besides the personal experience of being a client of theirs, went through some specialized training unique to the self-directed IRA industry, met up with the owner, got introduced through a third party to the owner of IRA Innovations, and said, hey, I'd love to be part of your organization, and open an office up in Nashville. And we, wound up making things happen. So that was 2007, I guess, is when I opened in the office here. It took about a year or so to get it all set up, but been with them ever since, so been doing it a while.
That's such a great story. I think the one thing that's fascinating is that it continued to draw you in. And the one thing that I want to talk about a little bit is that you're actually doing it, that you are a real estate investor, that you have some rentals, you've done some rehabs, and even more just bizarre that you're actually building, you're doing new construction. And a lot of guys that I meet in this industry, especially bankers, because this is close related to anal, detailed, specific people like the banking industry, and you're almost like a banker per se. I know it's not technically correct, but you're an engineer by mind. And how did you get rental property? Like, did you do that after you figured out the IRA stuff?
Yes, that's a great question. So yes, again, and you alluded to it with the engineering background, right? We have a tendency, anybody who's an engineer or CPA probably can relate, is we have a tendency to overanalyze things. So, we get analysis paralysis a lot, when we're looking at things. We want to think through all the outcomes. What's the good outcome? What's the bad outcome? And am I willing to take on those types of risk? So when I first got into investing outside the stock market, I'd mentioned I became a client of that self-directed IRA custodian down in Florida. My first alternative investment that I did was private lending. And the one reason is that, okay, that's not that hands-on. It's not like buying a rental property, but it gets me into doing something that I kind of could understand, right? It's not that hard to understand that, hey, if I lend this person $50,000 and I'm going to charge them 10%, that part's easy to understand. So then it's a matter of what's the risk involved and how do I protect myself. So I did that for a couple of years before I jumped into the rental world.
When you're a private lender, were you lending and borrowing, or you were just lending?
At that time, I was just lending.
You know both sides of the fence, so you can walk someone through both sides.
Oh, absolutely. So not including what I see now as an IRA custodian, a self-directed custodian. Personally, lent money, I have a money partner who helps me fund other deals that I do, and then you've mentioned the rehabs and the rentals and even the new construction, which is it's a very crazy market in Nashville right now, so we're just trying to take advantage of it. So I've done all of those things. So I can certainly walk somebody through the personal experiences of, hey, here's what I look for when I lend money, or here's what I look for when I buy a rental property. And then, of course, if they want to use their IRAs to do that, then that's part of it as well.
So the funding that you are aware of right now, most of your funding for your stuff that you're doing is private or through self-directed IRA. You're not using banks at all?
I only use banks every now and then when I absolutely have to. So like one of the new construction projects that I did, I used some bank money and it was for less than half of it. But that's the only time I've used bank money, that one deal in the last 10 years.
And would you say that was easier or harder? You're an established investor, but, people scream and rave that private money, IRA money, is a lot easier to acquire.
Well, it normally is. I would agree with that. So the bank money, it wasn't that hard for me personally, just because I've had such a long relationship with the bank, with my personal checking and savings and the business account as well. But it is even for me, it was cumbersome, if that makes sense, and that, hey, it takes time to get all the approvals done, and then, they give you a schedule they think they're going to hit. And it's actually a great point is I had a very specific deadline. I needed to get started with that money, and they're like, oh, yeah, we can definitely make that happen. And then about 2 weeks into the process, they were like, well, yeah, but it's going to be another 2 weeks. And I went in, very professionally and said, listen, our agreement was, I was very clear I needed money by July 30th, and now you guys are telling me it's going to be like August the 10th. And I'm like, that's a deal breaker for me. I said, I will arrange other monies if you can't make this happen. So they jumped through hoops and made it happen. But I think kind of where you're alluding to, sometimes you're at the mercy of the bank. And my personal experience was that was going to happen. That generally you don't run into that with private money. Generally it's a lot quicker process. When I use private money, I do it in a very professional manner. I present my deal, if that makes sense. I'm not just going to say, oh, hey, I've got this great deal where I think we can make, $20,000 a piece or whatever the number is going to be. I actually put it together, at least, if nothing else, in a simple Word document or an Excel spreadsheet that, hey, here's how the numbers break out. So it makes it easy for somebody who maybe is not accustomed to the real estate side of things to look at it and analyze it. And they can say, oh, yeah, I can see where this makes perfect sense and why I should consider the investment.
All right. So we got a great base here. Let's talk about an IRA and what is it? And a lot of people have it at their job. So now we're talking from a guy that's, let's just say, this is a friend of mine. He works for an oil company. He works at the Ivory Tower. He runs all this construction. He, got the job right out of college. They give him an IRA. That's their benefits package. He's sticking money in this. They're matching it. Let's talk to those type of people. How does it get? What is that? And then could they convert that to a self-directed IRA? How could they start loaning money to real estate investors or to any entity for that matter?
Sure. There's a little bit of a challenge in that question, Stephen. When it's a person's current employer, which may not, could or could not be in your example you've done. When a person is at their current job and their current employer it's generally called a 401k unless it's a state-run plan, but they have a 401k where they're doing matching. The employer actually has some discretion on will they let the employee move the money away while they're an active employee. So if it's your current employer, and it's something you want to consider doing, your first thing you probably should do is call your administrator of your retirement plan and ask that question. Can I move money to an IRA I have with another firm? And it'll be a yes or no, and it's probably a 50-50 chance it'll be a no. Let's assume it's their former employer, because we have, in today's world, there's, the average individual changes jobs something like 7 or 8 times throughout their career. So there's a high probability they've had that, moved on, so they've got this 401k with their old oil company or whoever it may be. So in that scenario, once they've left the position, they for sure can move it. The employer cannot limit them. So what you do is you just contact your current custodian, the current 401k administrator, and say, hey, I want to move my plan to an IRA I've got with another firm, and they'll have some paperwork for you to fill out. And then you open an account. While you're doing that, you open an account with the new firm, so IRA Innovations. You fill out an account application, and it becomes generally a traditional IRA, or maybe a Roth, but most likely a traditional IRA at that point.
And then when it gets over to, say, your account or any custodial account, now
Sure.
It's considered a self-directed IRA.
Well, we call it a self-directed IRA. Self-directed, just for clarification for the audience, is an industry term. It's not an IRS term. So when we say self-directed, we mean we're a custodian who puts no limitations on you, but we also don't offer you investments. We don't have any investments in-house, so that means you have to go find the investment and then direct us, so self-directing the investment to your custodian. If you do it at Charles Schwab or Fidelity or somebody like that, they may use the term self-directed, but all they mean is they're going to let you pick any stock or mutual fund that you want. It's not limitless like what we do.
All right, so I talked to my employer. They said yes, or I lost my job, or I quit, and I rolled it over. I have this money in a certain bank account.
Sure.
That's just sitting there, Fidelity or whatever. I recently just did this, so I understand the process. And I'm so new to this myself, this self-directed IRA stuff. So then I get it over to you or whoever. And, again, this is not the sales show, but I just think that you do great business, and a lot of my friends use you, and that's the main reason why I wanted to interview you. But we're not trying to sell your services today, and I hope people will call you and use your services. But for all intents and purposes, now I have this certain amount of money sitting there in a custodial account. What does the word custodial mean?
It's just somebody who has responsibility or oversight of the account. The IRS requires for an IRA that there is a third party, non-biased facilitator, if you will, or administrator of the account.
Okay.
So, and the term that was given is custodian. So that's all it means is, hey, we're a third party firm who has the legal authority and approval to manage or oversee somebody's retirement plan.
Is there any risk? I know there's risk with, look at Lehman Brothers crumble,
Sure.
But is there risk in sketchy custodials? Is there a difference between, I'm assuming, size? That's a pretty simple, there's other custodials that have maybe more clients than other
Sure.
custodials. Is there a risk for someone to park their money with an organization?
Well, I think there's always a risk with any financial organization. Every custodian has to be approved either by the federal government level or at the state level, depending on how they file what's called their charter. And either way is perfectly acceptable. A good example would be, think of your local community bank as a bank approved at the state level, and that doesn't mean it's a less risk-adverse bank or more risk-adverse or whatever it may be. It's still approved and monitored at that level. So we're the same way. The caution I give to folks when they're talking about looking at me versus some of my competitors, do you get a good feel for the people you're dealing with? Do they have investment experience? I think that's a big plus. People I value my position as being an educator, and so I just try to help people understand what they're trying to do. And if they become a client of mine, great. But if they don't, then maybe we all still learn something anyway. But then the other is the longevity in the business. You and I, we've had discussions before where this industry has really kind of started exploding in the last 2 or 3 years. So you'll see a lot of these companies who have started, just in the last couple of years, 2, 3, 4 years. So they're still new in the business. And I think, as we mentioned at the beginning of our call, we've been in business since '03. So we're actually one of the older, there's some firms a little bit older than us, but we are one of the oldest firms in the industry that's doing this.
What excites me, Mike, is that you actually are an investor. I mean, it drives me crazy, when I talk to a banker and they don't understand why I'm trying to do a no money down deal. I'm like, look, why penalize me when this is a $100,000 asset that I got under contract for $50,000, and they're only going to loan me, 80% of $50,000. I mean,
that's right.
Ignorant. Why would you penalize a real estate investor? And that's what I enjoy chatting with you, is because you understand, you have a whole concept of how to invest. You invest, you lay your own money down, you borrow money privately through IRAs and through banks too, so you know the whole process. You have a passion for finance. All right, so now my money's sitting in a custodial. What's the safeguards? I'm at a local real estate club meeting. I'm like, hey, I got $50,000, $100,000 sitting in this deal. It's not doing anything. How do I get a return? Do I tell people, hey, I got private money to lend? Do you guys handle that? Like, a guy comes up to me, hey, I got this deal. It looks legit. I want to fund that deal. Do you handle that paperwork? What happens? How do I get the money from the custodial to the closing table?
No, that's a great question. So the process is fairly simple in that the first step is you'd have to identify somebody you would be willing to lend the money to. And we can certainly, again, if an investor wants to talk to me to say, hey, Mike, I've never done that before, what should I be on the lookout for? I'll certainly have that conversation with them. I know, again, I can share with them how I lend when I lend my money. But a typical deal we would see would be, Mr. Investor, the gentleman with the IRA is going to lend money to John Doe, and let's say it's $50,000 for a rehab project that they're doing. So the IRA client would let me know that, say, hey, Mike, I'm going to lend to John Doe. We would have some paperwork they would fill out. But him and John Doe would have to come up with the actual loan agreement, if that makes sense. We don't prepare a legal document. So some of those guys will prepare them themselves, but then some will use a local attorney just to draft those. It's generally not a very big expense, a couple $100 to draft some loan document that outlines the loans.
Like a promissory note.
A promissory note, absolutely.
So me, the lender, let's just say me, the lender, I agree to Joe to loan him money. I'd have to get, in my title company, they would have him sign it, but I guess I still have to come up with the original promissory note and the terms and the agreement and the interest rate.
That's right. That's right. And like a typical, we have thousands of clients and we see loans just every day. And, a typical loan that we see would run somewhere in the 8 to 10%. That would be typical. There's exceptions on loans higher and on loans lower, but an average rate of return my clients are going to ask for is going to be in that 8 to 10% range. So that's very typical. You mentioned a title company. Here in Nashville, a lot of our title companies will prepare those notes for you. So everybody's a little bit different.
Okay, so you get them, so I collateralize it. That's with the mortgage.
That's right. Okay. I secure mine. I have guys that don't, but I certainly would if it were mine, especially on the first deal.
I think you should every time. I honestly.
Well, I would too, unless there's some extenuating circumstance. Like I've got.
That's true. You're right. I actually just loaned somebody in Chattanooga some cash to fund a deal, and I trust him well enough, and I know him. He comes to all the, Mr. Landlord meetings, but that, I don't have time to collateralize it, and it's just a small amount of money. But
that's right.
All right. Okay, so we get the paperwork rolling. I got to fill out some docs with you, the custodial. I identify my investor, whoever, the person I'm going to loan it to. Then you guys, my custodial, would wire the money to the closing company, correct?
That's correct. That's absolutely correct.
So then this happy guy did not have to go through a loan application unless I was sophisticated as an investor, as a loaner. Right. But he asked me for the money. I gave him the money. I may have not asked for an appraisal.
That's right.
Do a lot of your investors ask for appraisals? Do you even know about that? You probably don't. But
that's a great question, and we don't need to know, but I can tell you from experience, most do not. And even I've shared with everybody, I do this with my own money. I have asked for an appraisal one time.
Okay. Well, I can't wait let's just get some more experience. So I'm just going to walk these people final through this, and then I want to get back to that question. But so then what happens? Then I fund the deal. Then now this guy needs to pay me $500 a month. Where does that money go? Who does he write that check to? Because I've read a few IRA books. I can't accept that money personally. He can't make it out to Steve Van Kallenberg. How does it work from there?
That's right. That's a great question. So think of it this way. The IRA is its own entity or its own person. So the IRA made the loan, so the borrower makes payment back to the IRA. So each month he's going to make a payment back to IRA Innovations for Stephen's IRA or IRA account number, sends it back here, and then that's reflected in the client's account. So when they get their quarterly statement or if they log on and look at their account, they'll see that their investment is a promissory note to John Doe, and then they'll see the monthly payments being made back in each month as well.
So, all right, basically, I fund the deal. The guy starts writing the check, and he makes it out to IRA Innovations with my account number on there, and then you guys take that payment, cash that check, put it into my custodial account, and then I have access to that account again to loan it back out. I can look at it through my quarterly statement, and I can look at it online.
That's correct. Yes, sir.
So how do I keep track of that? I mean, you guys obviously put that in there. I mean, if I was like anal, like at the 5th of the month, I would just log into my bank account.
That's right.
Okay. Then that's how I can manage this asset or this loan, which is considered an asset.
That's right. That's exactly right. So if he's not paying or runs late or something, then you can say, hey, Joe, I see that you didn't pay, you owe me a late fee or what's going on type of deal. Absolutely.
And so when I do the closing instructions and I put a 1% origination fee or 3% and then a doc fee and a junk fee, all those fees that's like profit that goes right into my IRA, correct?
That is correct. That's absolutely correct. Yes, sir.
Okay. Wow. So that's basically it. And then when he satisfies the loan, he would obviously request for me to give a release. I mean, he could stop payment at any time, correct? Because if he stops payment at any time, it's my responsibility to chase after this guy.
That's right. So the IRA, if he stops payment and for some reason you chase after him and foreclose, right, because there's the mortgage in place or sue him, whatever it may be, then sure, you do that. And let's say you did foreclose on him, then the IRA ends up with the property is what would happen.
Okay, so it's my responsibility.
That's correct.
Basically, just so we're just clear, so when people call you up tomorrow and start, expecting all these things, the custodial just basically handles the paperwork and the funding. And that's limited scope to that. Yes, you are a wonderful man. You answer all the crazy questions that I have. But basically, I'm on my own. That's why it's called a self-directed IRA.
That's right, Stephen. So that's a great point in that we as the custodian, we do all the duties required by law for an IRA custodian to do. And, of course, we provide the services back to the client as well. But let's use our loan example. We are not a loan servicer, and that is a difference. So it is up to the individual to be in control, that they're the one who's monitoring the account, making sure the borrower is paying on time, and if any further action is needed, then they step up and get, if they need to get legal counsel or whatever, or late notices, whatever it may be. If any of those things need to happen, it's up to the individual to make sure those happen.
Got it. All right, let's step this up a little bit. Let's get to a complicated question just to catch you on your toes here. Of course, I don't know anything about this, so this is why I'm a good interviewer person, because I'm like literally dumb about it. But I overheard some real estate investor / realtor run his mouth about some other company that you can set up an LLC inside your self-directed IRA. And then that LLC is able to write checks instead of contacting the custodian all the time to do withdrawals. Does that make sense, what I'm saying?
It does.
I know that's...
No, it absolutely does.
Explain, because the guy's real cocky and I want to punch the dude in the mouth, but I would like for you to clarify that or teach me that. What is that?
No, sure. So it can be done. We have clients who do it as well, Stephen, just so you know. I'm not sure it's always the best thing to do. There's some custodians, that's the only way they set it up. They'll call them a checkbook control IRA or IRA LLC. But in the nutshell, what happens is the IRA forms an LLC. So it's generally a single member LLC, and the IRA is the member, for anybody who understands how LLC works. So the IRA is the owner of the LLC, but then you personally generally would be named as the manager of the LLC. So that means you're in control of the LLC, but yet you're not the owner. The IRA is the owner. So you direct your custodian to fund your new LLC. By doing that, you as manager can go down to the local bank and open a checking account, and those funds are deposited in that account. And then as the manager, you've got basically direct access to your IRA funds. So you could go buy a piece of real estate in the name of the LLC. You go to the closing table, sign all the closing documents, and then if there's any repairs or anything like that to be done on the property, you just use the checkbook for the LLC. So it certainly can expedite access to the funds when you need to make an investment. But there's also some downsides to it as well, in that one is you've got the extra costs associated with forming an LLC and keeping it active with whatever state you form it in. So like in the state of Tennessee, it's just under $400 each year to do that. But then there's also another potential burden. It really depends on the individual, and you kind of alluded to this, Stephen, is that there's certain people the IRA cannot do business with, called a disqualified persons, and that burden now, as manager of the LLC, that burden falls on you. So you have to make sure the LLC doesn't do business with these certain family members that the law prohibits. So if you're a real stickler for detail and good playing by the rules, then yeah, it can certainly simplify some things from a timing perspective. But if you're one of these who kind of fly by the seat of your pants and let's just make it work out all in the end, then it may not be the best solution for you because you're probably going to get yourself in trouble.
Right. And when you say trouble, is that IRS trouble?
Yes.
Since we're messing with retirement funds?
That's right. So when an IRA does business with one of these disqualified people, the penalty is the IRA is completely distributed. So any taxes and penalties would apply. And then they can also fine you for doing business with a disqualified person. They can fine you up to 50% of the account value. So it's pretty severe.
So if I had $1 million in there, I could be fined $500,000.
That's right. I had a client do that, it was a pure mistake, and he didn't even get the fine, but still he had it was almost a $200,000 IRA that he formed the little LLC, and he just wound up, the LLC got doing business in such a way it wasn't supposed to, so he didn't get the penalty, but his entire, he's under 59 and a half, so his entire, $200,000 got distributed, so he had, besides that being taxable income for him, he also had to pay a 10% early distribution penalty, so it was still severe.
Yeah, you just don't. First of all, you don't want to be on the IRA. The IRA.
That's right. You don't want to be in their crosshairs. That's right. That's exactly right. So
just keep it slow and steady. But
that's right.
It just sounds sexy. And he made it seem like this is some new thing. And I've heard of checkbook IRAs at seminars, and it's the new hot guru thing. Buy my course, and I'll teach you how to do a checkbook IRA.
That's right. And again,
it's been around for a while.
Absolutely. And again, we don't try to talk people into it or at it, but we'll certainly allow our clients to do it. But I do spend the time to make sure they understand the advantages and disadvantages, because again, there's some of both. Make sure they understand it versus just jumping all in and not understanding what's at stake.
All right, let's finish up with the custodial thing. Last question on the custodial management. How do they make money? What's the fees? Is it a percentage? Is it yearly? Is it on transactions? Can you I know this is such a broad question, but I'm new at this. I want to use you. What's the cost?
Well, yeah. So, each custodian is a little bit different, but it's generally either tied to annual fees or transactions or some combination. And ours is a little bit of a combination. We charge an annual fee to maintain an account. We give you a choice of either paying on a per asset charge, so each investment that you make. So our example of lending money or buying a property, those would each be a separate investment. Our per investment charge is $295. Fee option 2, though, is based on overall account value. So if you're making multiple investments within the same year, that one may save you money. It's just a sliding scale that goes from $195 and goes up. So a quick example, a $100,000 account on value-based is $525. So with 2 investments, you'd save a little bit of money being on value-based.
All right, and that's used for someone that is doing a lot of transactions, like they're doing more than 2, obviously. Like
absolutely. Yeah, and that crossover point is dependent upon where the account value is. Is it 2 transactions justifies being on value-based or 3? And then we do charge a funding fee when you fund a new investment. It's generally around $100. It's just under or just over, depending on which investment. So, but a general rule of thumb, most of my clients are doing 1 deal at a time. So most of my clients are paying me, around $400 a year. It'll be a little more, a little less, depending on what they're doing, but it's really not real significant. We've done a study years ago, and the average client pays us less than 0.5%, which is less than any mutual fund company will charge. So it's very reasonable. And again, because of my investing, I can give you some ideas, especially if you're going to loan money, you might be able to recoup some of that from your borrower.
Yeah, and that's what I want to get into next. And I just want to say this comment out there, folks. Listen, the mutual fund business, they're making money regardless if you're not making money. If you are paying those management fees regardless, and usually on a percentage, if you lose, half your portfolio because of some scandal with some company, you're still paying a management fee. They're still making money based on your money.
That's right.
So that's why I enjoy... That's why I'm so attracted to the self-directed IRA, because I'm in control and I can borrow money from someone else. They're going to get their percentage and, they're not going to lose it all. And it's back collateralized by an asset. That's why I'm so attracted to this. All right, let's get down to it. So give us some creative ways. How are you loaning money out yourself personally and how you borrowed money? Give me some examples.
Yeah, so personally, what I do is not rocket science on what I do. I mean, all of my loans have always either been to owner-occupied residents or somebody. I'll give you my last loan that I did for an owner-occupied was just about a year ago. It was a lady who had went through a divorce unexpectedly, in her 60s. Her husband left her, didn't see it coming type of deal. So she walked out with a little bit of money, but her credit was terrible. So she couldn't get a traditional mortgage. A mortgage broker that she was working with knew that I lend. So he called me and said, hey, would you be interested in lending on her? So it was a 50%, 52% loan to value. To me, that was a no-brainer. It's like, hey, if she's got that big of a down payment, I'll lend her all day long without doing a credit check because I knew her credit was bad. And then I didn't require an appraisal. I just had a realtor friend of mine pulled comps because I've been around it long enough to say, all right, is it close on the value? That because it was 50% loan to value versus 45, kind of doesn't mean a whole lot. So we worked out the interest rate, lent her money from the IRA, just like we alluded to earlier. I had an attorney draft a promissory note with the mortgage, and she signs it all, and the IRA sent money to the mortgage company and owes the mortgage, and she makes a monthly payment back.
Are you in the first position? Or
yes, I'm the only lender on the property. Yes. Okay,
and then what was the terms?
I did 1% on the front end and 1% on the back end. So when it gets paid off.
What does that mean on the back end? Oh, when she pays off?
At payoff, right. So 1%, right. So 1% origination fee. So she had to pay 1% at the time the loan was made. So that was paid back to the IRA. And then we charge a 10% interest rate is what we charged. And then there's a 1% payoff or 1% on the back end. So when she pays the loan off, besides the final payment, she'll owe another 1% payment as well.
On the original amount or on?
Yes, sir. On the original amount. Yes, sir.
Okay, cool.
And that's common. I have clients who do that. They do it that way to recoup their IRA fees. Is why I have a lot of clients do it that way.
Sure. I mean, you're in control. You can do whatever the F you want to do.
That's right. As long as
it's like the Wild West. It's like the Wild West out there with private money. I mean, I have people charge 4%. I've heard.
Oh, absolutely.
I have friends that I don't borrow money from them, but they charge 14% and 3%.
Oh, absolutely. And they'll charge 3 points or 5 points. Yeah, absolutely.
On that owner-occupied that you loaned to that gal, what was the terms? Was it like, what was her AM? What was it a balloon? Tell me about those.
No, so on that one we did, because she was trying to repair her credit, we did an interest-only monthly payment. And, it's for 12 months. So the whole purpose was that she's working diligently with this mortgage broker to try to get her credit score up so she can get a traditional mortgage.
So basically, this opportunity for her was to get her into the home, that she's living in the home. It's deeded in her name. She just has not a sexy loan, but she's got in. She's living in her dream home. And now she has 12 months to whip tail to get her credit back to where it needs to be because of this divorce. Now, I mean, of course, all things sound great. What happens in 12 months? Because I have a house like this right now that I did a lease purchase to. These jokers can't come up with, they can't get it funded. What do you do? I mean, you renegotiate. What happens after 12 months? You're like, okay, you're tying up $50,000 of my money. What happens next?
Well, so, I mean, it's really up to me at that point, and it's funny that you bring it up because we're coming really close to the 12 months. We're within about 6 weeks of that. So, and we're actually having those discussions now. So, I mean, the options are going to be just that. Is one, do we extend it out some, because she's not going to quite be ready. She's going to be a few months behind. So do we extend it out? And just so the audience knows, that's probably where I'm leaning, because I'm a pretty nice guy, and she's paying. So getting 10% of my money, I'm not going to complain about that. The other thing is I could go through the foreclosure process, start the foreclosure process if I wanted to. And then one thing that I offered to her even was let me buy the property back. So let me buy it, and she becomes a tenant. And I wasn't, I'm a nice guy, so I wasn't trying to screw her. So part of my offer on that was let me buy it back, because she's got, roughly 50% equity in it, and I didn't want to just yank all that away from her. So I was like, I'll even let you apply part of that equity to like prepay on a rent, and it wouldn't be for free, but a discounted rent basically, because I wanted to make something there. We've had those discussions, haven't come to a final conclusion yet.
Attractive. That's attractive as an investor, because
it is.
You look at a traditional mortgage on it.
That's right.
You get something 6%, 5% on a 15-year, 20-year AM.
That's right.
And you turn around and sell it to her, man, and you give her cash.
That's
She's
right.
going to turn around eventually and pay you out.
That's right. So again, I try to come at things more as a problem solver where everybody kind of wins, right? Not just can Mike make every single penny he make? Can he make every nickel he can? It's like, hey, can I make a good return and still, but in her example, because it's her household. It's not just somebody selling an investment property; it's her household. Can I make it so she's happy, comes out okay too? So,
man, that's actually a really good example, and I love that you have options. Like, she has options too. She could renegotiate, maybe pay you a fee to stay.
That's right.
2, she could hard money somehow, or not a really good loan and cash you out. Or you can just buy her out, give her, turn around, and let's just say it was a $100,000 house, and you give her $20,000, and you take over the house at 80%.
That's right. That's right.
Or 70%, and you got a deal on your money, and then now you got an instant cash flow. And someone at her age, that's very attractive, because you can't take it with you.
That's right. That's exactly right.
That's extremely powerful. I mean, you just made my day. All right. I mean, we can, dude. Seriously, Mike, we can go on for hours. I'm definitely going to have you. I'm definitely have you back on the show, and I know that you're extremely busy, and I appreciate your time. Is there any tips or tricks? It may not tricks per se, because this is really regulated by the. You got to be regulated in some sort, so there's no tricks per se. But any tips for people out there that you can that came to your mind through this interview that you can give them some headway?
Well, one from an IRA perspective is just. First, you don't have to be content with the stock market. As you can take control, and it's not as hard as you think. So, again, I'm such a fan of self-directed IRAs. I left a previous career to do it. I mean, that's how big a fan. So there's a way. I mean, it's easier than most people think to go out there and take your retirement plan and make 8, 9, 10% on your money. It's just, it takes a little bit of effort on their part, but it's worth it is one thing. And then from an investment standpoint, to get started, because whether you're using your IRA money or just your own money or somebody else's money, is you got to get started. And the way I did that was through networking, spending time at like Mr. Landlord Convention, my local RIA group. But then, during that process, I found a couple of folks that I valued their expertise. So I made myself, get plugged in with them, and they kind of became my mentors on getting started. So I think there's value in, finding a mentor. And mine so much so was I was willing to share some money with them on my first deal. Say, hey, handhold me through this first deal, and I'll share some of the profits with you. It was worth it to me to have that type of guy.
Yeah. Man, that's awesome, man. You inspire me. I want to leave with this. I met a guy at a conference in Ohio, and that he started a self-directed IRA with $2,000, and I'm not sure how long it took him. I'm going to interview him pretty soon. He brought his IRA to $1 million with $2,000. I mean, have you seen or heard any of those type of stories?
I have. I mean, and I wonder if I'm thinking of the same guy you are thinking of. I know
his name is Bob.
Okay, no, this is a different guy. I know a gentleman who's, when Roth IRAs first came out, he put his first $2,000 in, never put any more in, and it's grown to multi-million dollars over the last, 20-plus years. But, yes, certainly, I mean, I've got a client who does wholesaling, and for you guys that don't know what that is, it's generally
Yeah, we know. Yeah, we have a lot of wholesale. I have a lot of episodes on wholesaling.
Yeah. So on wholesaling, seriously, a gentleman who has done his and his daughter's account, they're wholesaling properties in it. So their initial investment literally was $1,000, and it's worth well over six figures today, and that's in less than a 2-year time frame.
Man, that's exciting.
So
there's so many ways. And
absolutely. I tell people, Stephen,
right.
I say, if you can think of an investment outside your IRA, I don't care what the investment is, if you can think of an investment outside your IRA, the probability is high it can be done inside your IRA as well, as long as you're with the custodian who doesn't put limitations on you.
Man, that's awesome. All right, so how do people get a hold of you, Mike? You know, they like you. You're very calm demeanor. You know your stuff. How do people contact you? Is there a phone number, email, website?
All of the above. So, phone number, the toll-free number is 866-333-0411. If you want to dial a local number, it's 615-794-8961. The website is just IRAinnovations.com. And then my personal email is mike@IRAinnovations.com.
And all this information will be on the website. So
Absolutely.
If you're listening to this while you're driving, just click on there and get to Mike, and he will take your questions, which is really cool. And, Mike, I look forward to seeing you again, probably at some conference somewhere, and I'll buy you a drink.
Absolutely. Looking forward to it. Thanks, David.
All right. Have a great day.
All right, buddy. You too. Thanks. Bye-bye.
Bye.
Thanks for listening to the Savvy Radio Show. Glide online and listen to our other motivating episodes at SavvyRadioShow.com. Connect on Twitter @LandlordBook and always be buying assets.